What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, talking about a little drone company called AeroVironment, AVAV. Now, as always, guys, there's a little bit of a delay from when I'm talking here on this live feed to when you hear me. And we've got the chat window up here open on the side. So we got that good and going. And if you see down here on the bottom, I've got my little banner running. So if you're not already hooked up with us on Live Trader, shoot me those emails, livetrader@zax.com. Make sure you get connected so that you get all the premium stuff, including our morning after feed that we're going to be doing on Friday, as well as the Nike feed that's just for the paid subs too. So livetrader@zax.com. Go ahead and shoot me those emails. And that's what we got going on today. So, like I said in the in the emails that I sent out, that this AVAV trade today was going to be a little longer term than we're typically used to. Now, I like finding these stocks that are sort of, not exactly mainstream, not on everybody's radar for a number of reasons. One, I like uncovering new ideas that people simply don't have. That's always a lot of fun for me. Two, being able to find options trades on these oftentimes is pretty profitable. We do pretty well. I don't know if it's because nobody's looking. I gotta get my Epic pen up. I forgot about it. I don't know if it's because nobody's looking and it just prevents new opportunities for us. I'm not sure, but we've done pretty decent when we've had opportunities like this. So every once in a while, I like to switch it up with you guys and find something that maybe you guys haven't been looking at, haven't been talking about, okay? So why don't we go ahead and look at this company a little bit. And as always, I kick things off with my price consensus and EPS surprise chart here on Zax.com. Black line corresponds with the right y-axis, which is price. The red arrows are earnings misses. The green arrows are earnings beats. Multicolored lines represent the evolution of our Zax consensus estimates over time. And you'll see that really 2013, 2014, lofty expectations that came crashing down, maybe just ahead of the curve, right? Drones started to get hot and all things drone kind of went up, but there really wasn't any revenue or EPS to support it. Selling off pretty harshly throughout 2014 and 2015, finding a bottom and troughing just as the EPS estimates troughed, right? So you have that kind of simultaneously. So that's a good thing. Excuse me. So there you go. So now we're starting to see a little bit of EPS growth, movement to the upside. The stock, though, is kind of in Chop City. But you do have an overall bullish tilt to it, especially recently. So coming out of, second half of last year, I was going to say, I'm going to go out on a limb and say that this is October, November, and of course it is. And really since mid-January is when this thing has taken off. Last quarter had a really good earnings report, but there hasn't been a lot of consistency out of these guys. Just kind of flip your coin. Are you beating or are you disappointing? So this is one of those companies where I think, while the EPS overall sort of direction is going to make sense, the actual number is not going to make or break this company. Okay, because it's just too early on in its development. Now, I mentioned drones. So they do, like the unmanned drones with cameras on them that can go and do recon missions and stuff. They do some military things. But these guys have an electric vehicle charging network, and I think you saw that on the thumbnail for this session today is one of the AeroVironment charging stations that they have. So that's neat that they're getting a little bit of exposure to that. So eventually somebody's going to get wind of this. And when we have rallies in Tesla, this thing's going to rally too. Eventually that whole ecosystem is going to benefit. But it's all about the drones. So they're having a good day so far today. The RSX ranked number 3 hold. They're going to be reporting after the bell today, so it's kind of shorter notice, but I knew enough of you would check it out to at least warrant doing a show on it. Remember, tomorrow we've got Micron, and Thursday, for the paid subs only, we've got Nike, and then we'll do the morning after on Friday morning. If you're not already hooked up with me, livetrader@zax.com. Shoot me an email. We'll get you a free trial. Okay. Look at the revenues here. So this quarter, we've got 44% year-over-year revenue growth for AVAV. Man, I got new allergy medication I'm messing with, and it worked great last night. And this morning when I woke up, not working for me. Okay, so current quarter, 44% year-over-year growth. If you look at next quarter numbers, 40% year-over-year growth. Current year, next year. Next year looks to slow pretty significantly. Very interesting. Not something you usually see, revenue growth screeching to a halt like that. But they did have a nice quarter last quarter that helped knock that out. This is the weird part. So current quarter EPS, 330% year over year. Next quarter, 74%. But the current year number is supposed to actually disappoint. And then next year is supposed to be crazy. That's interesting given, the revenue numbers. So one thing I read about these guys is they've really tried to wrangle in their costs over the course of the last year. And that's really what helped them have a great quarter last quarter. Now, these guys are back-end loaded. So what that means is something like 46% of their EPS is supposed to come in this last quarter, which they're reporting today. So puts a lot of pressure on this last quarter. Very few people following this company. The only company-specific report I could get was after earnings. I didn't get any research reports of somebody coming out and giving me the gusto on AVAV. Ahead of that, it was all industry reports, but no real company snapshots or anything like that. So the EPS has just been stagnant, and you can see that. Current quarter, they're looking for almost $1. Next quarter, they're going to lose money. But the current year number is supposed to come in at 21 cents. Next year is supposed to be 48 cents. So nice little growth there. And if you look at last quarter, this is really where it came in. Negative 9 cent loss versus expectations calling for a 34 cent loss. So a big beat definitely helped the stock out. Okay. Let's look at the stock. And it's had a heck of a run here. These are those October lows down near 22. Huge spike up, runs out of gas around 30, retraces, goes higher. So one thing we could do is see if one of these targets got filled on a fib extension here, which I'm pretty sure it has. So you do this. Interesting how this works. You go from the lows to these highs. Then you see the retracement, almost textbook to the 61.8. And then now we've moved higher. Now I can modify this fib here. Since we're going past it, I got to use a negative number. Kind of silly, I know. But let's do negative 0.5. Oops, sorry. Let's do negative 50. And let's get in the negative 61.8. And you'll see that even the negative 50, or the 50% extension of this move, puts you up at 33. And then the 61.8 is all the way up at 34, pretty much. So plenty of room to run here for AVAV. Although it has been a very nice run as of late. Of course, nice, strong, bullish trend line being put in here. And things have gone well. However, since mid-April, you've really been sort of chopping around in this consolidation range. So the resistance kind of lies 32.75-ish with support 30.5 basically. That's in the short run, okay? 50-day moving average has provided plenty of downside support. around all this. Money flows. We're positive. Here's a little bit of a concern, though, that these money flows are starting to dip down while the stock is kind of going sideways. That's actually a bearish sign right there, okay? Because you have a little bit of a divergence between the money flows and what the stock has been doing. It's not screaming at my face that something's wrong here, not at all, but just a little bit of bearish divergence here. And to give you some perspective, though, so look at this, late April. So if we go up to late April, you see the stock kind of rally into this, and then this divergence just going south, it finally tugged it down with it, okay? But here's the thing, and we've seen this before. When we get into these earnings reports, these are areas where this can jump in one direction or the other because of sudden inflows coming into the stock and it going to the upside or to the downside. So it's like all this is telling me is we've reached a decision point here in the stock, which of course we already knew that. That's what happens at earnings. Commodity channel index had a little bullish crossover here, so that's actually good. That's in the positive direction. A little bit oversold or overbought rather at 131. Let's zoom in on this a little bit. So what you want to see in the commodity channel index is you want to see this get to negative 100 and then cross through the zero line. That's exactly what you have. So we're actually on a commodity channel index buy signal here. So that's good. And again, the stock is up ahead of earnings today. Also good. Let's bust out my G14 classified stuff we got here. Consolidated surprise chart here on AVAV. We can see what it's done historically. So the January quarter, not in January, right? 5.84%. We got a -3. Here's a big move to the downside in July of 2016. Or for the July quarter, rather, -17, yet a -6. Then we got a 5 and a 13 to the upside. But what I want to see is these April quarters. Go back, another April quarter, big positive on the April quarter, followed by a big negative in July. So this thing whips around a little bit. There's another April quarter, big positive, January, big positive. So it does have a tendency to kind of whip around. And if you're looking for any kind of pattern of, okay, well, why? Let's look at, so this is a surprise to the upside, surprise to the upside. These are all surprises to the upside. Big downside, big downside. So it kind of tracked with EPS a little bit. Let's see if revenue was more indicative. Still have a little bit of a deviation here where you have a beat on revs. Miss on revs, that miss. Miss on revs, that miss. Miss on revs, that miss. But a miss on revs here, and the stock goes up. But they had a decent beat. So kind of a mixed bag over here with AVAV, okay? So that's what we're looking at there. One other thing I want to pop up here. Let's dig into these revenues a little bit more. So we can see maybe there's some pattern here happening. And, you know, we're not getting... Look at this quarter, though. I mean, they are hoping for a spectacular quarter. And even so, even at that level, that's still forecasted a 64 BIP contraction in revenue year over year. And then next, see, guys, this is what's jumping out at me here. Is this number just kind of out in the middle of nowhere on its island, right? 54, 73, 86, 85, 122, but next year we're only going to do 93. And this is revenue, not EPS, so it's hard to conflate this thing, right? Or inflate this thing. And then the rest of the revenue numbers are okay. I mean, there's nothing here that's really jumping out. Getting a little bit more optimistic a few quarters out. So I think maybe that's why you got the stock doing things like this. I mean, the choppiness that we've seen in this stock is insane. And I would say that a lot of this has to do with these lumpy sort of revenue numbers that they have, the lumpy EPS, the lumpy revenue, okay? Now, management was pretty confident that they are going to come in at the bottom end of the EPS range, but still in the end of the range. So last quarter, they basically reissued guidance. They were just like, yeah, you know, they confirmed the guidance that they're going to get in kind of the same place, but at the bottom end. So we'll have to see. Okay. Anyway, so I think we've set the table pretty good here for AVAV. Now, let's get into this options chain. So in the email, I was saying this is going to be a little bit longer term kind of thing, because this is kind of off the path a little bit. Okay, we don't get a lot of people trading in this stock, and if you look here, we only have the monthlies. And then the strike prices, we're just getting them every $5 anyway. So that's why I was saying this is going to be a little bit, that's partially why I was saying this is going to be a little bit of a longer term sort of idea. The other reason was, if you look at the chart here, so going back, I mean, seriously, all the way back to 2013, you can see trend following earnings, trend following earnings, trend following earnings. This was a little bit of a whipsaw, but then eventually trended. Okay, so sideways action, trend. So these guys, because there's not as much coverage, there's not as much news. So there aren't as many events that can slap this thing in one direction or the other. So post-earnings drift on a stock like this tends to be stronger, takes a little bit longer to develop, but that's okay because that plays exactly into our hands with the Zacks rank. Because we know that earnings trends sort of take a while to go ahead and show themselves, right? Versus a price trend that could change at a dime. Okay. Let's go ahead and do a little math here. I was busting out the big guns the other day with the scientific calculator. Let's see. Let's go back. Let's just go standard. Let's get our at the money call, at the money put. So here we're going to use the 30s. Because that's the closest we've got. So 205 by 245. We're going to call that 225. That's the at the money call. The puts are going for 85 by 110. So let's call this 97. So 322, divide that by the $30 strike price. We're expecting over a 10% move immediately following earnings here on AVAV. And I think that's pretty much spot on with what we've noticed back in our handy dandy sort of calculator here. Our G14 classified estimates of the surprises that we've seen historically. Because there's some big numbers. There's some big 17s, 13s, and then if we went further back, 11, 11, 8, 11, 25. So it's in line with what I would expect here out of shares of AVAV. Okay, but remember, this is some post-earnings drift that we want to just participate in, okay? And we think it's going to take a little while for it to develop. So how can we put something together like this? Let's not look at the July expiration. Let's not even look at the August expiration. I'm going all the way out to September to put something together on this because of just how long it took, okay? And remember, I warned you guys, it's going to be a little bit on this one, right? So where does this fit in? This is not like the roll of the dice random earnings trade, which we do all the time, which is a ton of fun. This kind of goes more in the camp of you have a little bit of a longer term stance on the stock. You like the direction that it's going, and you think that this current quarter is going to you're going to be right about the direction on this current quarter, right? I think it'll continue in the trend which you believe it should go in. I'm still going to give you bullish trades and bearish trades, so you know. So when you're looking at some of the premiums here, and again, these are all out like $5 at a time, right? $30 puts are going for $3, or $30 calls rather, going for $3. 35 still have a buck in them. If you look at the put side, the 35s are $4.70. The 30s are $1.63. You've got a little bit of premium heading out down here into the 20s. And then when you go back to your chart, you say 20s. I mean, geez, that's, you know, that's all the way down here. It feels like a long way away, but don't forget, this is a stock that has had spikes and drops down from here. In this case, 2016 went from $30 to $23.50 the next day. Okay, so it does have a tendency to whip around a little bit. It can do it. I'm going to get vertical and almost kind of boring. Let's change this though. Let's just do show all of these. It won't even show me a 40. I was hoping somebody would have a 40 out here, but they do not. Okay. So just look at the 30-35 call spread here, if you're bullish on AVAV over the long run. Now, that shouldn't seem like too far. The stock's trading 31.60. This new calculator that they've got doesn't quite move the way it... Come on, let's move. You know, they do these Windows updates, and they give you fancy, new-fangled stuff like this, and then I like the old one. I want the old one back. Anyway, but $35 on a stock that's trading 31.60, 10.75% move, pretty much, is what you need to see, which is almost precisely what this thing was pricing in, right? So it's not far-fetched at all that a rally takes this up through 30, 35. So if you go along the $30 call here, it's going to cost you $3.13. Simultaneously short the $35 call, you're going to get back 98 cents. So your net outlay here is going to be $2.15. The difference in strike prices is $5. Minus that $2.15 is $2.85. That you could profit on $2.15. You can make 132% on this, and all you need is shares of AVAV to rally past $35 at expiration. Okay. So here I'm going to look at, should we call this a long-term bull debit? It's about as long-term as we get. Yeah, why not? So I'm going to say long-term bull debit. Long September 15th, 30-35 call spread for a $2.15 net debit. Dean brought up an interesting point, and I like it when you bring this up, Dean, that it looks like the gaps get filled on this. This is true. So look, gap, it got filled, but it took a while to get filled though, Dean. Right? We're not talking a day of trade. This is weeks after. So, and here's another gap up. Man, it sure took a while. Gap down. And it took a while. But within these are these little trends that take place over a few months periods. See? Anyway, so I don't know. I don't know that this is going to have the reaction, sort of that next day reaction where we can come in and scoop this thing up. But it is something to note. And this is a strategy we should really be employing, guys. We should be looking at stocks that reported a month ago and see if they've begun to reverse any sort of initial trend that kicked in, and if they are starting to creep on back. That would be something. We need to come up with that, actually, like a little tracker for what's happened, for where these stocks are since earnings. That would be nice. Dean, you're onto something. All right. Now let's go back here on the bearish side of things. And again, this one's initially going to be a little bit boring here. Because what you're going to do is in this case, you got to look at the 35.30. But here's the problem. I'm going to show you a few of the issues that I have here. And we're going to do all three of these strikes just to illustrate my point. So one way is buying that $35 put. It's going to cost you $470. Simultaneously shorting the $30 put, you're going to get back $163. But your net outlay here then is going to be $307. Now the difference in the strike prices is still just $5. Minus that $307 means you can only make $193 on $307 or 62%. Now granted, the stock doesn't have to drop as much. It just has to go underneath $30. But typically when I'm putting together these vertical call spreads, I want to make sure that I can at least double my money to give me a favorable sort of risk versus reward profile on this bad boy. And if you were to go further out and do the 30-25, you're already out of the money. But in this case, $163 is what that $30 put is going to cost you. Simultaneously going short the $25 put, you're going to get back 53 cents of that. So $110 is going to be your net outlay. And forget about the potential that you can make on this. You could make $390. Okay, so it's like a ton of money, but that's kind of just shouldn't be looking at the reward side of this yet. You got to think about the risk side of this. And the risk side of this is 30 minus that 110. So your break even in this case is 28.90. So if you were bearish, you could put on a trade that's out of the money here on this put spread, and your break even is going to be 28.90. Because I had thought about simply just going long. In this case, just going long the 35 or just going long the 30 call here and just letting it run. So this 28.90 puts you down here. Now that's really not outside of the realm of possibility given what we've seen from shares of AVAV. And if they really have a disappointing quarter and they don't have that huge number that they're gunning for, then you could see some of that downside pressure. And again, this is the huge number. And this is the only thing that's bugging me, but it really is bugging me about AVAV, is that they're aiming for this 122 number that just doesn't sit well with me. But management was confident. I think last quarter, the responsible thing for management to do would have been, yeah, there's no way we're going to hit that number. And then they would have told us, we'll be at the bottom end of the range. So maybe they have an ace in the hole that we don't know about. And it's tough to find what the ace in the hole is because, like I said, there's no research reports on these bad boys. But either way, I still owe you guys a bearish trade on this. So let's go back. So I honestly think that the way to go for the bears, long-term bear debit, is if you went long the September 30-25 put spread. No, not that one. The 35-30 put spread for the 307 net debit. And this is why. Because essentially what you're doing is you're putting your break even at 35 minus 307 or 31.93 because you're deeper in the money on that put. Now of course you have limited your upside potential a lot of it really, by buying that $30 or by shorting rather that $30 put. But your break even at 31.93 is 30 cents. Well, now I guess a little bit further. 50 cents away from where the current price of the stock is. So it's really just a blip. And now, how does that differ from what happened? My chat didn't go through. It's just a blip, really, from where we are right now. So it's something where I think this $30 put is going to evaporate a little bit of this value, and it ends up being a more conservative trade, but you got a higher chance of it actually working out for you, I think, with AVAV. Now, the other thing you could do, if you did the 35.25, which I didn't price out, which I should have, if you do the 35.25, 470 is still going to be your cost basis on the 35 put, and then simultaneously going short to 25 put, you're going to get back 53 cents of that. This ends up being 417, which doesn't make it all that much more attractive. You're adding $1 of risk for the potential to make money, below that $30 range, well below that $30 range. I don't know. It's just, to me, it just doesn't seem that attractive. So let me get this long-term bear debit back in here. Just long as September. 35, 30 put spread for 307 net debit. Okay, now that one I think went through, so that's good. Now, the thought of loading something up like, and I did look at this, selling a 30 in September, or July rather. So you could do a calendar spread here where you went long the $35 put out in September, and you go short this $30 put here in July. That's not a terrible idea either, because you're going to get back a ton of money here. You're getting back 98 cents on this. So remember, it was like 470 is what the September put was going to cost you. So you can get back 98 cents of that. So you get 372 could be your net outlay if you're going out there, right? I think that's what the numbers were. And then if it doesn't close below 30 in a few weeks, you can always do it again for the August number, and then you could do it again in the September number, right? So we could be as complex as we want to be, or as simple as we want to be. Bill loving the butterflies. So guys, we're going to talk butterflies on Friday, I promise. Bill, I'm not sure if you were there when I was talking about it, or if it was you. So in the butterfly, you're essentially doing, you know how when we use our strangle, where we're short a call spread and short a put spread, with the butterfly, rather than a call and a put, you're going to use the same contract. So you'll do short a call spread and long a call spread, in the hopes that it kind of sticks within the beacons, the navigational beacons again. We're going to talk about that on Friday, because like I said, Bill, I haven't done like a detailed sort of training session on that. So I want to do that before I just go start throwing stuff at people. So there you go. Anyway, I think the trade that pays is the long-term bull on this one. And that's because, and I know it's tough, it's really tough for me to say that given how much it's moved. And that darn revenue, this number is really bugging me. But I think I'm going to bite the bullet here, because this company is innovating and they're changing, and it's not just a drone company. And I really like that. I like that they're diversifying their business here. Granted, this could take a little while, but we'll see if they comment about that in the earnings report. But overall, I think the trade that pays is the bullish side of things. Okay, and then again, I promise on Friday, on our morning after, we're we're going to talk butterflies for everybody. We messed around with the calendar spreads. Everybody got kind of up to snuff on calendar spreads. We're going to do the same thing with the butterfly. We're going to do that on Friday at 9 a.m. Central, just for the paid subs. So if you're not already hooked up with us, shoot me those emails, livetrader@zax.com. Get your free 14 days. And it's about to be earnings season, so we're going to kick it off. Yeah, Bill, of course. Of course it does. Right on the precipice, though. If this wasn't, well, Bill, I don't know if you were here for the technical side of this, but I was talking about the commodity channel index crossing over on through here. We were locked in a consolidation here, but anyway. So, trade that pays, the bullish side is the bull debit. Tomorrow, we've got Micron. That's going to be spectacular. A lot more fun. Not going to be a long-term thing. We're going to have some short-term awesome trade ideas we can look at for Micron. And then Nike, we're going to do that the morning of, or the day of. That's going to be 10 a.m. Central. So Micron tomorrow, 1 a.m. Central. Nike, Thursday, 10 a.m. Central. And then the morning after show, Friday at 9 a.m. So I want to thank you guys so much for hanging out with me here on Live Trader. I will see you all in the chat room later today. If you don't know where it is, it's been going on the bottom of the screen here slowly. It's the chat, e-chat.co/room, I believe, /213012. Let's see if I remember. Room 213012. There you go, folks. So I will see you all in the chat room a little bit later. Have a fantastic afternoon.